Hey, how's it going? I think we are live on YouTube. My name is Jason Eichmiller, the reverse mortgage expert. And today we are going to take a look at reverse mortgage loan amounts for, and today is January 17th, 2023. They change from time to time, normally don't go up or down drastically from day to day, but week by week and month by month, they do fluctuate up and down. So if you're looking at getting a reverse mortgage, you just want to figure out, hey, does this reverse mortgage, does it work for me and does it make sense for me? Then you're in the right place. We're going to take a look at a couple new things for 2023 loan sizes based on different ages and different home values. I think the ages we're going to use are 55, 62, 72, 82, and 92. So we'll do 5 ages. And home values, we'll do $400,000, 700,000, a million, and 2 million. Although with the proprietary reverse, we can go a lot higher. Are we going to hit your exact age and your exact home value? Probably not, unless we're lucky. But what you can do, if you want more information or if you want to see exactly how a reverse mortgage can work for you, is you can catch up with me, and my contact information is below. You know what I'll do? I'll show you our website right here, and hopefully, let me try to share my screen. Just got to go over here. Let's try to share it somewhat efficiently. And we'll just do this right here. So, okay, cool. This is our website, reversemortgagereality.com. I'm sorry, no, that's a different one, reversequotes.com. I've got a couple reverse mortgage websites. Yes, you can go to Reverse Mortgage Reality, but this one is Reverse Quotes. The neat thing about this website, you've got a little bit of information right here. You can put your info in here if you want to call. And then if you want to see how seniors who've gotten reverse mortgages, how they feel about reverses. I've got a bunch of interviews with folks that I've helped right along here. Bunch of Google reviews and letters and all that other fun stuff. So again, go to reversequotes.com, or you can call me at the below number. So let's jump into this little presentation here. And if I can get PowerPoint back up, let me see here. Let's do it from the beginning. All right, so we have reverse mortgage loan sizes for January 2023, January 17th, 2023. We'll go through here and we'll give you some information, and hopefully this will help you as you're deciding whether or not to get a reverse mortgage and trying to figure out, hey, can this thing actually help me or not? So let's see here, just click here and this should change it, hopefully. I got to do resume slideshow. There we go. Now this should work. So, how to contact us? There you go. You got my contact information there. Again, my name's Jason. Run Key Home Lending and Reverse Mortgage Reality. Phone numbers there, website, email, etc. Now, the first big thing for 2023 is we have new loan amounts. So the maximum home value in 2022, it used to be $970,800. Now it's $1,089,300. So that's an increase of $119,000. Now, is that a big deal if your house is worth 400 or 700? No, it's not. But if your house is worth, say, 1.1 or a million or 1.2, this is a big deal for you. And the reason why it's a big deal for you is you'll be able to get more money, because when the maximum home value goes up, you're qualified based on a percentage of that home value. And let's talk about that for a second. We'll go on to the 10-year Treasury note because, and I didn't do a slide for this or anything, but the way you qualify for a reverse mortgage, we're looking at, you qualify based on three things. Number one is your age. And if you're married, we're going to take the age of the youngest of you two. So you're looking at age. You're looking at home value. So we know where home values are. We know they were, well, obviously depending on where you live, but they peaked about, say, 7 months ago when interest rates were very low. And since then, with rates going higher, home values have dropped a little bit. So when you're staying the same age for the most part, but when home values drop a little bit, you qualify for a little bit less with a reverse. And when home values go up, then you qualify for more with a reverse because we're going off of age and home value. And the third thing we go off of, and nobody really thinks about this, but it's very important, we go off of interest rate. So for the most part, reverses, they're governed, or the rate that governs us, the index that governs us, is the 10-year Treasury note. Sometimes it's the 1 year, and basically the 1 year and the 10-year kind of follow each other pretty closely. But we're looking at today. Today's 10-year note is somewhere between about 3.51 and 3.53. So that's where we're looking at now. Back in early 22, if you look at March of 2022, you can see that it was under 2%. And we can see in November, it peaked. You got a double top there, right in the low fours. So as a rule, as well, as rates go up, you get less money from a reverse. And as rates go down, you get more money from a reverse. So keep that in the back of your mind, especially if you're thinking about the times. You've got two big variables, again, that are going to kind of determine what you can get. Again, your age is pretty static. And it's not going to change, or it'll change once every 365 days. But home value, again, as home values go up, you get more, and as home values go down, you get less. And interest rates is, for the most part, as rates go up, you get less, and as rates go down, you get more. Hopefully that makes sense. Go ahead and comment below, actually, if you have any questions, or you can feel free to reach out to me on that. But I'm not here to turn you into a interest rateologist. I just want you to understand the big picture of how these things work. So how has reverse mortgage money changed over time? So let's look at a 72-year-old with $1 million home value. And we're just looking at about a little bit over a month ago, December 9th, and versus today. The 10-year Treasury rate actually dropped just a tiny bit. And again, it fluctuates up and down, 1 to 2 basis points a day, sometimes a little more, sometimes a little bit less. But you can see that on December 9th, the HECM, which is the government reverse, that gave $367,000 back a month ago. Now it gives $372,000, so it's a little bit more. Where the bigger bump came was with the proprietary reverse. About a month ago, the proprietary was giving just $324,000, and now it went up about $16,000. So from $324,000 to $340,000, all in the span of about a month. So we see that as rates are cooling down a little bit, for the most part, you're able to qualify for a little bit more. But as we go through the ages and the home values, there will be pockets where you can get a little bit less. All right, let's get into it. Let's start. Most of the time I start at age 55. Start at age 92. So cool. So how much can you get if you're 92? So we've got home values of 400, 700, a million, and 2 million. And you look at, so you can see HECM. Again, HECM is the government reverse mortgage, and that's the one with the maximum home value of 1,089,000. And then you have the proprietary reverse mortgage. That's the one that's outside the government. It still gives what's called non-recourse protection, meaning if you owe more than the house is worth, you don't have to worry about it. Your heirs don't have to worry about it. The FHA or the lender picks up the tab. But the proprietaries, normally they give you a little bit less money, and but they go to higher home values. So you can go proprietary. You can do a proprietary reverse with a $10 million home value. You might get $4 million out of it, depending on your age. So let's take a look here, and let's compare and contrast from December till now. As you can see, for the lower home values of 400 and 700, the HECM is giving just about the same, maybe just a tiny bit less, about 1% less than they did a month ago. Proprietary, it's jumped up pretty drastically. So on a $400,000 house, it's gone up about $16,000. On a $700,000 house, it's gone about $35,000 up. Now, once you get to $1 million home value, the HECM is returning more now than it did a month ago, as is the proprietary, of course. And at a $2 million home value, the HECM's still returning more than it did. Well, a month ago, the maximum home value with the HECM was $970,000. Now it's 1.089 million. So that's a big reason why the HECM is giving more money. But you can see, obviously, the proprietary wins out. Big picture for this. By the way, towards the end of this, we're going to go into kind of the differences of when you should take a HECM versus when you should take a proprietary. Although I wouldn't take them as steadfast rules. So if you have any questions about that, feel free to give me a shout. But For the most part here, HECMs, until you get over $1 million, probably until you get about over $1.2 million, the HECM is going to give you more money than the proprietary reverse mortgage. So if you're just looking at cash for the rest of your life, the HECM is always winning, at least right now. So that's age 92. Age 82, we're getting younger here. It's like Benjamin Button, if you remember that movie 15 years ago. Brad Pitt starts as an old man, ends up as a baby. I don't remember anything more about that. So you can still see at age 82, the HECM's giving you a little bit less money than a month ago, but it is giving more money than the proprietary. The proprietary is giving more funds, especially if you're at 400. Look at that, 183 versus 163, 306 versus 291. Once we get to $1 million, though, the HECM is, again, it's outperforming where it was a month ago. And 2 million, kind of same thing. The proprietary, once you go over 1.2 million, no matter how old you are, you're going to do the proprietary if you want to max out your cash. If your home value is probably like 1.2 or lower, maxing the cash out, the HECM is going to win here too. So let's see what we have for the next slide. Just kidding. We got a joke. So these two guys, they're sitting on the park bench. Can I whistle? There we go. Okay, calm down, Betty. They're not whistling, they're wheezing. Betty got a little, now did she get excited? Like, was she happy? Or was she a little upset? The joke doesn't kind of tell, but she's got a little smile on her face, so maybe she got a little excited that the boys were whistling / wheezing at her. All right, these are bad jokes here. All right, and age 72. For some reason, it is not showing here. So what I'm going to do real quick is stop the share. And it's funny, sometimes this stuff pops up, sometimes it doesn't. But I'm going to try to find the 72-year-old slide, and then I'll show it on here so you can check out 72. Just gets a little cumbersome, especially when we're live here. That's perfect. So let's see here. Age 72. Boom. Now that's age 92. Let's see if I can get to age 72. All right, age 72. How much can you get? And we'll go back here and we will share the screen once again. Share screen. There we go. All right, age 72. We fixed it. We got it to work. So sorry about that. Hey, this is live TV. How much can you get at age 72? Again, you can see the HECM is giving just a couple $1,000s less than it did a month ago. If your home's up to 700, then once it's $1 million or more, HECM is winning. And you can see that the proprietary, as you get younger, the proprietaries, it's getting a little bit closer than it was to the December lows, but it's still giving a little bit more money. And you can see again at $2 million, hey, the proprietary wins. You're going to find that the proprietary, it basically always wins again once you're over $1.2 million. So now let's go back to the slideshow and see if we can get the next one. All right, age 62. And then one thing I don't know is, are any of these other slides blank? Lucky me. All right, so now we're at age 62 here. So home value, HECM is giving, again, less up until $1 million. You can see the trend. And home value 2 million, the proprietary is winning. And you can see that the proprietary is giving more than it did a month ago. Again, no big deal, not a big thing or anything, but the proprietary is giving, the proprietary is winning, especially once you go up to, well, once you go up to 1.2 million, the HECM wins at 1 million, but this is age 62. And then let's see if we can get to age 55. Oh no, look at that. We have another cartoon. This guy needs better glasses. The internet is so fascinating. No, Harvey, that's the microwave, not the internet. It's funny stuff. All right, now age 55. Let's do a calculator. Now you can see that when you're 55, there's an NA for the HECM. You want to tell me why? If you know, comment below why you understand that the HECM is giving less money at age 55, or is giving nothing at age 55. Not less money, it's nothing. All right. The reason is that to get a HECM, you have to be 62 or older. But the proprietary goes all the way down to age 55. So HECM got to be 62. If you're 61, 60, etc., you can't get it. But the proprietary goes all the way down to 55. All right. So you can see here at age 55, the proprietary is still winning, giving $25,000 more at 400 than before. I mean, these are drastic differences right here. 40 on a $700,000 house, the HECM's giving $44,000 more. On $1 million, on a $2 million, those are big bumps from back in December. So it's good. The market's going in the right way. I absolutely love seeing it. So now let's take a look at the difference between the HECM and the proprietary reverse mortgage. So different strokes for different folks. Sometimes the HECM is smarter, sometimes the proprietary is smarter. So first of all, the proprietary on the right here, if your home's worth over $1.2 million, the proprietary makes a lot of sense if you want to max out your cash. If you want all the cash out right away, the proprietary makes sense. The HECM, if you're free and clear on your house, say you have $1 million house and your loan size is, let's go back and see. All right. Go age 6, we'll go to age 82. $1 million home value, and your loan size is $468,000 or $443. Well, with the proprietary, you can get all $443,000 right away. Up front, they give you the check, you go home happy. With the HECM, though, they're going to give you about 60% of that $468,000 right away, and then they're going to have you wait a year for the extra 40%. Now, wise man would say if you're going to live at least 1 year, it's no big deal. You can wait. But if you really need the money and all the money right away, then the proprietary, even though you're losing about $25,000 or so, the proprietary is the right thing to do. All right, let's go back to this guy right here. Oh, those are the advantages with the proprietary. Also, if you've taken cash out within 1 year, the HECM doesn't allow you. So let's say you get a home equity line and you get some cash. The HECM won't allow you, with a few exceptions, they won't allow you to do a HECM until you've waited a year past when you took the money the first time. So just know that that's kind of in the weeds, but hey, if you got a loan or if you got a HELOC within the past year, you know to be cognizant about it. Now let's look at the advantages of the HECM. HECMs are huge for monthly income and for that retirement safety net. So the reason why is the HECM, it gives you this line of credit that lasts forever. So it's not like a traditional home equity line of credit where normally they last about 10 years. It's not like a proprietary reverse mortgage line of credit where they only last about 10 years. The HECM line of credit lasts forever and ever, amen. No matter how long you live, they can't call it. Plus, the HECM has this credit line growth. It's ridiculous. It's so good. It actually equals the interest rate plus the annual mortgage insurance. So big advantages if you don't need money right now, but you think you might need it in the future. Go ahead, put it in a line of credit, set it, forget about it. Well, you can't forget about it because they'll send you a statement every single month telling you how much you have. But it will grow over the years, and the growth is tax-free. Okay. Line of credit, the reverse line of credit is also strong when you're looking to kind of fight against a down market like we have right now. You can actually take funds. You can take the funds if you're using your market funds to live. Take the funds from your house. Value is still relatively high, and we think it's probably going to drop a little bit. Versus taking funds out from your retirement accounts, where number one, you get taxed. Number two, well, in some cases, if it's qualified money, you get taxed. Number two, you're taking it from an asset when it's down. Every financial advisor that I speak with advises to take money from an asset when it's down, take money from an asset when it's up and save the money from the asset when it's down. There we go. So that's the main difference between the HECM and the proprietary. Obviously, everybody's situation is different. So if you have questions about what you should get, you can go ahead and give me a shout, or you can just comment below, and I'll do my very best to help. All right, now we've got another blank screen. Who knows what it is? And finally, just got to the testimonial screen again from www.reversequotes.com. So that's it. That's all I got. If if you're considering a reverse mortgage, if you've got questions about it, if you would like to learn how it works specifically for you, then I'll do my very best. I apologize for the technical difficulties on some of the slides not showing. But hey, this is again, it's live TV, so who knows? So if you'd like to reach me, I'm glad to share with you my knowledge. I've been doing these reverses since 2008. I've helped a little bit over 400 seniors learn about and get them. I readily advise CPAs, financial advisors, attorneys, realtors, help them all out with understanding when reverse mortgages are appropriate and when you should probably stay away from them. So glad to have you here. If you'd like, again, go ahead and reach me, 888-309-9705. You can email me at jason@keyhomelending.com, or you can just visit reversequotes.com. Check out what the other seniors have to say. And if you want to get in touch and schedule a time, just fill out the form right on the right, and we'll pick a time to chat. All right. Thanks again. Happy New Year. And if you need me, I'm here for you. Take care of yourself.